Let's go now to Foschini and Truworths relative valuations. And here, this is the point where we look at the graph. So remember, gentlemen, don't give away your trade of the day in this discussion. It's a little bit of a balancing act, but let's look at that Truworths graph. There it is. We're slightly down in terms of the high that we hit not too long ago. Daniel, talk us through what's going on.
So I'd say that, I mean, the stock has come off recently. I think that's more in sympathy with all the retail stocks coming off. Plus, guys are very concerned about the credit exposure of the consumer, especially taking into account that surprise African Bank update. I think all of these things are making the market quite nervous. You'll see a similar thing with Foschini. Guys are worried about disposable income credit. So what's the first thing you sell? Clothing. What's the first thing within clothing? Clothing exposed to credit.
Paul?
Yeah, the rot really set in January, where I don't know which one it was, but there just was this gathering sense that maybe these stocks are all a little bit overpriced. So they've all tumbled there, and we've all kind of now seen them go sideways a bit. But these are stocks that have done very well. I prefer to talk about the overall narrative. As I said before, Michael Mark has been the CEO there for well over 2 decades. They had a financial director, Mark Sardi, that they employed.
Now you're talking about Truworths. You said the overall narrative, and now you're going into Truworths, aren't you?
Yeah, so now I'm saying as far as Truworths is concerned, I think it's a more issue around where's the business going. The new CFO, Dave Pfaff, came back from London. He was with Datatech before.
One of your friends again?
So now I'm sort of wondering, what's old Dave going to get up to over there? I think it could be an interesting story going forward. I like the stock as it's positioned.
All right, let's have a look at Foschini and what's happening on that graph. There we go. Foschini's coming up, and very similar action there. Again, as we say, they have come off in January. Are we going to see a recovery down the line?
So what guys are waiting for is results to come out. The first to come out is Foschini. They've got a March year end. Truworths has got a June year end. So guys are going to be looking at those Foschini numbers very carefully. They're going to be
and then applying the rating to the entire sector.
And then they're going to use that as a read through to the rest of the sector, exactly. So they're going to be looking very carefully for like-on-like volumes. Is the consumer under stress? Increases in the bad debt charge? And it'll be interesting to see what happens.
Both of them are sitting, though, on sort of mid-range price-to-earnings ratios. So my sense is that people are not overly optimistic here. Are you worried about the sort of fundamental levels they trade at?
So quite a lot of that concern has been priced in, like Paul says. But if it's even more disappointing than people think, then you are going to see people overreact again and get a bit of a fright and really sell them off.